Hi, this is Amur with the Bulletin Board Heroes here at Vox Markets for Sunday, the 23rd of January. It's the weekend edition, and obviously not a great week for the stock market, so not so many heroes to search out, but maybe it's more telling when the stock has done well in a period of rather tough market conditions. Starting off with Asiamet, and here you can see the shares were up on Friday. Nice little bull flag here above the old 2.6 pence support, resistance area rather, and now that that's support, we're looking for the stock to hit that February resistance line from last year as high as 3.6 pence, maybe as soon as the end of next month, i.e. February again. Nickel prices seem to have caught people's imagination in the recent past, and obviously with Amo Minerals, that is a nickel play, as is indeed Eurasia. But here we've got Amur breaking a line of resistance after many months. That line there from August, also breaking the 50-day moving average at 1.8 pence, and above that 1.8 pence zone, we're looking for the shares to retest August resistance around 2.6 pence. I think if that comes off, it'll be quite an achievement, given that this is not exactly the world's most liquid stock. But nice action there in the RSI window with a couple of bounces off neutral 50, which tends to be a momentum indicator, as well as the trend line break and the higher support for January versus December. So a few positives there. On to African Pioneer, which released a decent announcement earlier in the week and has managed to hold on to most of the gains, most of the best levels, closing above the 200-day moving average at 2.84 pence, and above that we're looking for 3.5 and perhaps a bit more, given that the shares were opened up in June around 4 pence, so 3.5 to 4 pence maybe over the next month or so while we hold above that 200-day moving average. Moving along to a stock which is probably gets the prize as one of the more difficult ones to make a charting call on, and that's probably why it's so fascinating. Here we've got Braveheart, and what you can see here is it just gives the impression now that 20 pence, the floor on the shares, so higher low towards the end of last week, and also the shares coming off a very oversold RSI, so down towards 21. The last time they were down in that sort of 20 area, there was a decent rally there from basically below 22 up to the low 40s. So let's see if the technical magic may work again. If you're cautious, probably wait for an end of day close through 25 pence before assuming the 35 to 40 area on this occasion. On to IDE, which is otherwise known as IDO Group, and here looks as though we've got a decent bounce off the floor of the rising trend channel from back in February last year. The low there on Thursday, Friday around 1.1 pence, and above that we're looking for at least 1.5, 1.6, which is post-October resistance. If you're a fan of the shares, and also you're a believer that the sideways consolidation that we've had since October is actually very strong technical pattern, then you would be looking for 2.5 to 3 pence over the next couple of months for the shares, once we can get through that 1.5, 1.6 zone. But nice bullish divergence there for the shares at the end of the summer, and hopefully that will carry them on further for Q1 2022. On to a stock which I avoided on many occasions, Nostrum, but it looks as though it might be worth giving the shares a bit of a shout today. Here you can see that we had that bear trap gap reversal for the stock back in December. Probably want to see the shares through 8 pence now, or at least 7.5 pence now, to give us assurance that we can head up towards resistance on the way down, maybe from the summer at 11 or 12 pence on a 2 to 3 month time frame. But as you can see, not the greatest charting candidate on that situation. Onto a stock which is been highlighted on Twitter by somebody who should know what, he knows what he's doing, let's say. Here we've got Petra Diamonds, and beautiful bull flag there to end the week above the 50 and 200-day moving averages. Both those now rising, which if you look closely, they are both rising, which means we're in the run-up to a potential golden cross. The run-up to a golden cross tends to be the strongest part of the cycle for stocks or markets, so we'll be hoping for the shares to hit 110 to 120 over the next 6 to 8 weeks, which is the top of that broadening triangle from March, and the upside valid at least while we hold above the 200-day moving average around 78 pence. So it's a reasonable risk-reward setup on a technical basis. Onto a stock which I also managed to avoid, React Group, over the recent past, but we did have the gap through the or above the 50-day moving average last week or the week before last. Shares holding up very well with that sideways pattern, which looks encouraging. But at least while we're above the top of the gap at 1.9 pence, looking for further gains, probably towards post-July resistance around 2.7 pence. But the main thing here, I suppose, is that gap through the 50-day line holds, and we then go back to retest the best levels of last year, around 3.5 pence on a 2 to 3 month view. Not too many outright bullish momentum situations, so I've gone for one which is a bullish divergence setup. Here we've got a falling line of support from April on Skinbio Therapeutics. We bounced off that line effectively 3 times in the last couple of months. And the interesting part here is that we've gone low for the price action around 30 pence this month, but the RSI is actually higher than it was back in at the end of November when the shares were much higher. So that bullish divergence line could be something which triggers a reasonable rebound, maybe up to the low 40s where the 50-day moving average is. So above 30, looking for 45, as much as 45 over the next 4 to 6 weeks for Skinbio Therapeutics. But obviously, breaking 30 would rather upset the setup. So maybe one would rethink after that. Moving along to the last few stocks in this selection. First up is Scotgold Resources, which I managed to interview once, and it seemed quite encouraging. The current charting setup is that we gapped up last week or the week before last again, and we've also got the 50 and 200-day moving averages rising. Held the top of the gap, which is always crucial here, so that's at around 71 pence above that. We're looking for at least £1 at the top of the rising April trend channel, and perhaps even up to £1.10 or 15, which would be a more logical price channel top, perhaps by the end of March, something like that. But always worth following these situations where a gap higher is held and the price action has been nowhere near the top of the gap, which in this case it has. In fact, if you're really looking for the bigger picture, we've had 2 gaps down early last year and then the gap higher, so we have a massive island reversal for Scotgold, so suggesting something good may be happening there for that company's share price. On to ValiRx, which has had quite a long consolidation since its brief peak through 60 pence. November, December, January in consolidation mode with the bull trap through 40 pence, which wasn't very friendly either. But it looks as though I think we're getting to the turning point here. All the while we've had that consolidation, we haven't actually needed to touch the 200-day moving average at 27 pence, and while we're above that, we're looking for at least the low 40s and then perhaps a move towards the retesting November resistance on a 2 to 3 month view, so maybe by the end of March. Next trigger would be an end-of-day close through the 50-day moving average at 32 pence, so if we can get that over the next week or so, I think that would be a decent signal. As I said, not too many bullish situations to choose from at the moment, so maybe just worth putting one, let's say, in the diary. We've had 4 or 5 attempts for Xtract Resources to break the 6 pence and level and hold above it. So this could be this could be sort of 5th or 6th time lucky for the shares. The view here really is that next time we hold above 6 pence, we could actually just keep on going to the upside, which in this case would be most logically a retest of the 8 pence area, perhaps as soon as the end of next month. Bigger picture target up to 10 pence, but just I think we're chasing that weekly close above 6 pence for Xtract at the moment. That's it from me today. More updates during the week.